Stock market versus Forex, which is more profitable? It might be challenging to provide a definitive answer to whether a financial instrument, stocks, or FX is superior to the other. This is because foreign exchange and stocks are rather unlike, even though they have certain similarities. The most significant factor to consider when selecting whether to invest in foreign exchange or equities is which one will provide a higher return, given the specific circumstances of the individual investor. When picking between the foreign exchange and stock markets, Forex is often considered the riskier option. Still, it also offers more opportunities for victories in the short term. On the other hand, stocks are better for slower growth over the long run. Additionally, this is dependent on the particular investments made by either party. Hello everyone, and welcome to another video on our channel. In today's video, we're going to discuss stock market versus Forex, which is more profitable, so stay tuned to find out. Now let's start our video. What are stocks? Stocks represent an ownership stake in a business. One's ownership of a company's stock indicates a fractional stake in the company's assets and potential profits. When you invest in a company by purchasing its stock, you become a partial owner of the business and stand to gain financially if the stock price rises. Having stock that is privately owned versus publicly traded is a different experience. Publicly traded stocks can be found on an exchange like the New York Stock Exchange, or NYSE, or the National Association of Securities Dealers Automatic Quotation System, or NASDAQ. When a business does this, it is said to have gone public. Privately held stocks function in the same way, but since they are not traded on a public exchange, their price fluctuations may be greater than those of publicly traded equities. The issuing firm must also sanction each investment. Private stock is sometimes provided as remuneration to employees in companies, mainly if cash flow is insufficient to cover wages at the outset. What is Forex? Forex is an abbreviation that combines the words foreign currency and exchange. It is possible to make a profit by buying one currency, waiting until it gains value in comparison to another currency, and then exchanging it back for the original currency at a higher price, generating a profit. The value of currencies throughout the world fluctuates constantly. In a word, this is foreign exchange. Read our essay by Ken FX Freak for a comprehensive introduction to the foreign exchange market and a more in-depth explanation of what Forex is and how it operates. If you're liking this content so far, please consider subscribing and liking this video. Now let's continue. Investing in stocks. The stock market is an ideal investment vehicle for those with a long-term buy and hold horizon. Blue chip stocks and exchange-traded funds, or ETFs, are the most stable investments for traders due to their minimal volatility. When high volatility is high, the price moves around a lot in a short time. Investors have relied on blue chips, equities with a long history of success and a solid financial foundation for many years. These are the equities that tend to be more stable and which can deliver reliable growth over the long term. Checking stock prices over a lengthy time frame is preferable to doing it over a short time. Compare the 1-year change in PP and Rolls-Royce share prices and the 1-year change in Tesla and other large oil companies' stock prices. You'll see that the growth is frequently negative in the near term but optimistic in the long run. Assessing long-term development as opposed to stunning instant victories is essential when dealing with equities. Investors who can save money for the long haul, even decades, might consider purchasing stocks. Investing in Forex. The foreign exchange market is more of a trading technique than an investment. Because of this, the profits made in Forex are far more immediate. But the same can be said of the losses. Trade time is significant in foreign exchange, and it is essential to determine which Forex session works best for you. You can choose to trade during the Asian session, the London session, or the New York session. Suppose you are still undecided about whether or not to trade Forex or stocks. In that case, you must approach the decision from the perspective of what will work best for you as an individual, rather than focusing on which would be more profitable in the long run. Trading foreign currency, although having the potential to generate more significant gains in the near term, has a greater overall level of risk. You will also need to dedicate more time to the foreign exchange market because trading in the foreign currency market frequently demands daily attention and the study of currency pairings. If you are seeking a location to deposit your money while also earning an income on its own, then the stock market may be the perfect solution for you. You won't have to worry about keeping track of your investments, maintaining your portfolio, or making unwise choices if you buy stocks and collect dividends this way. Well, that's all for today's video. Tell us in the comment section how this one was. I hope that you found this video interesting. If you want to see more videos like this, then please consider subscribing for more. And don't forget to provide us with your valuable feedback. We'll see you in the following video with some more notable facts and stories. And until then, stay tuned.